All right. Welcome to the Big Skinny, where we got 12 stocks that you should be buying in the back half of the year. Is one of them SpaceX? Only time will tell. Tune in because the bears are roaring with a new whopper of a market lie in the headlines, and we're going to debunk that and show you the one data point that matters when you're looking at new investments in this market. All that coming up now on this week's episode of the Big Skinny, streaming live and to you from New York City on X. On YouTube, we want you to join the conversation because we've got all filling zero fluff more than we've ever had. Having some of my market friends and pros, fellow investors that are kicking my butt in the stock picking competition that we started in January of this year. We're going to get live updates from them, why the stocks that they originally selected are ones you need to own right now. So join the conversation. If you got a few other stocks you want us to evaluate too, we're not afraid to do that live on air. So don't be afraid to get pecking away at the keyboard. All it is 4 letters, ticker symbols that we'll look at. We'll let you know. We'll opine. We'll let you know if they're trash or they could be a smash hit. So we're going to get right into it. But first, we start with this week's rundown, the most important things that you should be paying attention to in the market to make sure you increase your bottom line right alongside ours. Well, if we're new to you, you know you're going to need to learn that we come out swinging every week, attacking one headline that is usually wrong because the consensus just gets misled. It just gets fooled. And if you don't pay attention, you can get fooled right alongside them. We want to make sure that never happens. So we also share one chart that gives you the key data that you should pay attention to. And then most importantly, we give you one investment insight that you can put to work literally right now while we're on air and the markets are open to hopefully increase your bottom line right alongside ours. Because let's be honest, we always say it here. If we're having fun, that's great, but it's a lot more fun if we're making money together at the same time. So this week's rundown is all about the bubble, babble, book it, because we've been moving all through these markets, bull market, rallying for the last 3+ years now. And every time we turn around, someone's screaming, are we in a bubble? Is it an AI bubble? Is there a bubble somewhere? Is it a tech bubble? Is it a .com bubble again? And now they've abandoned this, the bears. They've given up on trying to predict the top of the AI bubble and instead are looking at earnings and saying the earnings growth is too good to be true. We shared this headline last week. It's worth sharing again from the Financial Times that these Wall Street profit forecasts are fueling fears of an earnings bubble because analysts got caught flat-footed and have to keep raising their earnings expectations for S&P 500 companies for this year. And now they think, well, if there's not a bubble somewhere, there's got to be one there, right? Wrong. And we're going to talk to you about exactly why that is. And but here, let's hear it from one of the cautious, skeptical, not outright bears out there, Ben Inkler, co-head of asset allocation at GMO. What we are due for in the market is the eventual realization that earnings expectations will not come true. Now, our boy Ben here is super confident that that's going to happen, but I don't know, man. Maybe he has a better crystal ball than me because when I look at the data in this week's money chart, the data is overwhelmingly pointing the opposite direction. What analysts have expected every quarter have been way too low. So any bubble talk is babble. If you look at it here, the orange line is at the end of the quarter, what analysts expected for S&P 500 quarterly earnings that quarter, and the blue is where they actually came in. If you can't see right now, if you don't have your readers nearby, let me point out the most important thing here. 2 things, actually. You're seeing the growth reawaken. You're seeing in the most recent quarters, double-digit earnings growth is accelerating. But more importantly than that, if you go back, there's only been 2 times where analysts were actually right and wrong to the right. I can't even put my words straight. So, folks, I got up at 4:47 from a train to D.C. to New York. But let's go back to that chart. All that matters is that expectations are often too low. If you look back in the bottom left-hand corner, so second quarter and third quarter of third and fourth of 2022 is the only time that earnings didn't come in even better than what analysts were expecting. So right now, the consensus is for 23% growth for the S&P 500 in the most recent quarter. It's most likely, if we just use the averages and outperformance for last quarter, it's going to be 29%, almost 30%. This will be the second quarter in a row of 20% plus earnings growth for the S&P 500. And I got to tell you, it doesn't matter whether there's a war in Iran, a war in the Ukraine, whether there's treasury bond yields spiking, whether everyone's worried about inflation. At the end of the day, when those things all subside, stock prices ultimately follow earnings over the long term, which points to these stocks going much, much higher. And it's not just the Mag 7, which brings us to our investment insight for this week. Keep buying the equal weight S&P 500 ETF. We always talk about how to position our portfolios to profit. The easiest way is to find the key trends and themes and use ETFs, and then select individual securities to really amplify the returns that you can get from those trends. So we love the equal weight ETF here because while everyone was belly aching about too much tech concentration in the S&P 500, this normalizes that and makes sure we benefit from the outperformance of the unmagnificent 493, as our guest that's coming on later today, Tom Hayes, likes to call them. And as you see this year, the equal weight is outperforming the regular weight index almost 2-to-1 margin as we move through the back half of this year. So we got more for you coming right up, starting with the best performer from our stock picking contest. It's neck and neck between Kevin Mahn and Kenny Polcari. We've got both of them on the show, but we're getting to Kevin first. Updates on his two outperforming picks, whether they're still buys in the current market, how high they could go, and maybe an extra pick along the way. So we'll be right back after a quick break.
But I want to note that Jersey Democrat Congressman, is it Frank Pallone?
I think so.
So Pallone has called for a nationwide data center moratorium, and he would be leading the committee overseeing that industry if the Democrats take back the House.
Never thought I was going to say this, but now I'm like Brian, a big-time Federalist, because I'm okay with New York, and here's why. I called the CEO of TeraWolf, Paul Prager, $10 billion market cap company, building a data center in New York, already permitted, and I was like, talk me off the ledge because this sounds really bad and destructive to competition and innovation. And he said it's actually not a bad thing because you have so much froth in the data center market. We talked about it, Liz saying there's 3,000 to 4,000, there's 1,500 under construction. And Paul said this, anyone with land and line of sight on electricity thinks that they have an ideal site for data centers, so they're applying for it and crowding out the market like we saw with real estate when everyone wanted to be a real estate agent or mortgage broker. So his point was this, it doesn't deter what they're doing and building in New York and bringing online. The other benefit is it's only a 1-year moratorium, and things that are already permitted, you can't stop it completely. I'm not for this overall because of what Liz said as well. This is going to be the blueprint for what rolls out in a Texas or other states. There are other ways of doing this. Texas is batching it, where 42 gigawatts got approved in batch 0. It's going to take forever to do 42 gigawatts. So this is something that's a state of flux. I think the capital is going to move to the states that are welcome and open arms.
Rewarded. Okay.
Welcome back to the Big Skinny with me, Lou Basenese. We got 12 stocks for you to buy in the remainder of 2026. And Garth Brooks may have friends in low places. I am thankful to have friends in high places that have excellent stock picking skills. The first joining us is straight out of New Jersey, my home state too, Kevin Mahn. Welcome back to the Big Skinny, the man that is at the top of the leaderboard, no less, joining us from Princeton. So I told everyone you're smart. You're at Princeton.
I just have to be speaking at a conference today, but sure, I'll go along with that narrative, Lou.
I'm going with you. Graduated there, summa cum laude. You are a Princeton's tiger, true and through. Listen, man, I don't want to waste any time. Everyone loves to get the stock picks. You pick two for us. Endeavor and Comfort Systems kicking butt right now. Endeavor is up about 13%, respectable, outperforming S&P 500. Comfort Systems, smoke show, 77% rise since we last talked. Do you still like them? What's the latest developments, and where do you think the upside is for these two stocks?
Sure, and both of these names, Lou, follow my overarching theme for 2026, which was to follow the money. Follow money in terms of where all the billions of dollars are being spent in our economy. Comfort System fits that bill. In fact, in terms of the AI infrastructure build out, these data centers, as we know, demand a lot of electricity and they run very hot. Comfort Systems supplies the cooling that these data centers need. Now, I know another one of your guests and one of my good friends, Kenny Polcari, has Vertiv as one of his selections. I like Vertiv as well, but Comfort Systems has another tailwind to them because they were just added to the S&P 500 at the end of last year, so you'll get an index play too. Second one.
I mean, you guys, they're neck and neck, right? So we got to look. I mean, Vertiv's up about 78% as well. So you're saying the additional buying from S&P 500 inclusion could be a boon to their stock price.
It could be yet another tailwind in addition to all the concerns around new data center construction. That's going to make the demand for existing data centers cooling needs go up even higher, which increases the pricing power of these types of companies.
Yeah, I love this because most people think of AI and they think of the chip makers or the memory makers now. And they keep rotating in between these obvious plays, but you found an under the radar necessity cooling these data centers. It's the pick and shovel play on the pick and shovel, right? So I love that. Now talk about Endeavor. So Big Pharma is making headlines. Eli Lilly had another acquisition today. Merck had news about a pill, an LDL cholesterol drug and a pill. What does Endeavor do? What's the potential for their drugs in their pipeline?
Sure. Indivior is a small cap biotech company that is building out treatments for the curing or treating opioid disorders or opioid type of treatments. They have 2 drugs in the FDA approval pipeline right now. Stock's up about 12 to 13% year to date. But even more importantly, they got some momentum because it's up over 22% over the last 3 months. I think, Lou, that they are a potential takeover candidate. And if you look at the pace of M&A activity thus far this year, there was $236 billion with the B of announced M&A activity in the healthcare space during the first half of the year. That's a 90% increase over last year and the best start for healthcare M&A since 2021. So if I'm right here and large cap pharma is going to have to continue to be more acquisitive to take advantage of replacing all the lost revenue coming from the patent cliff and pressure from Congress to lower drug prices, Indivior may very well be taken out.
Man, I love this on so many levels. One, I lost my brother to an opioid addiction. So this hits there, but we've been banging the table about biotech rebound, M&A takeovers because the big pharma has, I think it's about 170 or 180 billion in revenue coming off patent between now and 2030. So tell everyone where they can find you because you are a plethora of stock picking ideas at your home firm as well and on Twitter and regularly on Fox Business. So go out on top, my friend. Do you think these things can continue at the end and where can people find you?
Yeah, I think they both can continue to move higher. There's other opportunities in biotech. There's other opportunities in AI infrastructure, but I encourage all your listeners, Lou, follow me on LinkedIn. I'm on Twitter at KMonHW, HenyanWalsh.com, or even SmartTrustUIT.com to find some of our unique investment strategies.
One more before I let you go. SpaceX, is it a buy yet?
It is not a buy yet for me. In fact, I think there's better opportunities in aerospace and defense than SpaceX right here.
I agree with you, man. I've been told everyone to avoid the IPO FOMO. You did as well. And thank God we look like we're vindicated. Because
great minds think alike, my friend.
Early days didn't look so hot when it ripped over $200. But
now it does.
Now it does. Hey, I'll see you on the golf course soon where your handicap is about 3 multiples lower than mine and never to be met. So you're a pro. I appreciate you, my friend. Safe travels back home from Princeton.
Thank you.
All right, folks, we're keeping it moving, rocking along. Our next guest is going to be Kenny Polcari because he joined on time. He's actually ahead of time, punctual. This is another favorite friend. He should be from New Jersey. He's the favorite Italian friend I have that's in the markets. Kenny Polcari, you could probably start hearing him giggle in the background as soon as you turn his mic on because we're coming in to Kenny to see what's cooking with the Italian, with the tan. You're in Florida. I knew it, my friend. Welcome back.
I'm in Cape Cod, actually. I'm not in Florida.
Does your shirt say kale? Are you on a kale diet? Is that what you're eating? Oh,
no, it does say kale, as a matter of fact. It's a joke because we were talking one night, we're out with friends, and someone was talking about how much they love kale, and I go, I can't stand kale. So they got me this T-shirt that says kale.
I love it. You can't make any Italian recipes with kale that are worth eating. There's no reason to bother with it. So listen, man.
I was going to join you, without my shirt on because I'm here at the beach, but I figured, once I brought the camera on, I went, oh, shit. So I put my shirt on.
Yeah, dude, I would have used that against you, so it's probably smart you didn't, my friend.
Oh, don't I know?
Yeah, so let's check in on your stock picks. You and Kevin are at the top of the leaderboard with AI adjacent picks. His is Comfort Systems Fix. Yours is Vertiv. Remind everyone, what does Vertiv do? Why do you really like it long term from here? How high could it go?
So
we're having technical difficulties because the man with the tan is out by the beach. So we're going to try and get it dialed in here.
One of those AI
We can now. You're back, my friend.
All right. So Vertiv, it's one of those adjacent plays, right? It's part of the AI story, but it's not the AI story. So it's not memory, it's not chips, it's not software, it's none of that stuff. It's cooling, right? It's about the infrastructure play. It's done very well so far this year. I think it's up about 70%, right? It's about power distribution, cooling, thermal management, data center infrastructure. And so we picked it early in the year, when we started this. And like a lot of those adjacent names in the AI space, it has done very well. I think this one, and I have to look at the chart, but I don't have it right in front of me right now. I think it's a little bit pricey at the moment. I wouldn't necessarily be running right in to buy it up here, but certainly on any pullback, I would continue to own it. I would continue to tell you, I'd be sensitive on how I buy it, but on a pullback, I would certainly buy it. Right?
So it's not way overvalued where you're looking to rotate out of it into something new, but it's got a lot more long-term potential because of the demand from AI.
Right.
Talk to me about Merck, because Merck's doing really well too. The last year, the stock's up over 50%. A great big pharma pick on your part. Why do you like Merck moving forward from here?
Well, it's a couple of reasons. First of all, it's a big stable play, right? So it adds stability to the portfolio. It's a big pharma play. You know me, I have a personal relationship with Merck just because of my own history. Their Keytruda product so far has saved my life. And so I'm sensitive to Merck in the first place. But it was the stock, if you had looked at it on the chart, I think when I picked it, it had just come off the bottom it had formed. It had really underperformed. It had started to form that bottom, and on the way up is when I said, okay, let's jump in. Part of the reason I think that we saw the drawdown in Keytruda and Merck was because there was that concern over losing the patent in Keytruda and what was going to replace it and all that stuff. And in fact, they've gotten some new approvals on a new cholesterol drug. I think it's called Lipfendra, and it's a new cholesterol-lowering drug. So they now have that. They've got a deep oncology pipeline, right? And so therefore, it's a big classic name. It's a dividend payer, so it belongs in all the high-quality dividend funds and all that stuff. But for me, I like it because it offers my portfolio stability. It's not certainly up 70% the way Vertiv is. I think year to date, it's up about 18%, maybe 18 or 19%. Again, I don't have it in front of me, but I think the last time I checked, that's what it is. So, it's not a barn burner, but it is certainly adding to the performance of the portfolio.
Listen, it's outperforming the S&P 500 by a factor of 2. All right, quick question for you. Ask Kevin about SpaceX.
Not yet.
Not yet.
I heard, and I agree with you. I never get in on the IPO deal. I tried to talk people out of it, people that wanted to get into it. I said, wait. But some people were just so excited about they had it, they got caught up in the FOMO of it. And so, whether they bought it at 170 or 200 or 225, everyone at the moment is underwater. Where's it trading today? 134, 133?
131. We're going down. It's a key psychological level that got broke, as we both know, right? It was on the upside and now on the downside. Everyone's going to be in pain right now.
Right. But think about this. In August, there's potentially going to be 900 million shares that become available to be sold. Now, whether they're all sold or not is not the question. The fact is they are going to become available. And that's that currently there's 630 million shares, I think, out there. So it's more than 1.5 times. So there's this massive supply coming, and so the market.
We're having technical difficulties because the man with the tan. Well, Kenny, I want to bid you. We're losing you again, so get back to vacation. Enjoy the hot weather at the beach. I'm jealous, as I always am. 2 great stock picks from you. We know more coming. Make sure you tune into Kenny. I believe he's on every Friday on Varney and Company if he wasn't on today. So he'll have other stock picks there for you too. And next, we're going to bring in Mike Lee, who's got some answering to do, just like I do on some stocks. He is bullish on a name that many people were bearish on, but I know he's got his good reasons. So we want to welcome to the show Michael Lee Strategy. Dude, what's up with Oracle? Should I sell it? Don't tase me, bro.
Man, we were sitting pretty. You look at that little bump in the chart right around the beginning of June. I wish we could have just kept going on that trend line, but we decided to get cut in half. And the volatility exists in these AI stocks because people just have no idea. Yes.
Now we got you, man. Back in.
Okay, sorry. So Oracle, like we were kicking butt and taking names just about 6 weeks ago, and then we gave it all back plus a lot more. I'll look. We are in the middle of the greatest infrastructure build out in the history of our country.
Agreed.
Okay. And the fuel that feeds the AI beast is data. Oracle owns 35% of the world's data. So what they're going to do is they're going to say, hey, if you want to get all your information, throw it into a large language model, you're going to have to use our cloud, and you're going to have to pay us an arm and a leg. Okay. They are the gatekeepers. They have the ring. Whatever they have the Glengarry leads, however you want to describe it.
Second prize is a set of steak knives, my friend. That's what we're giving away.
Yes. You can't make AI work for your enterprise without your proprietary data. Oracle has 35% of the world's data. So they are betting on the farm on their ability to host on the cloud your AI processes.
Right.
I'd say in the position they're in, that's a pretty good bet. However, we have all these naysayers and all these people that really don't understand AI. They don't understand how it's going to work. They don't understand token flow, betting against this company, not really understanding how this is going to work.
Well, let's pull on that thread a little bit, because I give you props on Palantir for the same reasons. No one understood what the hell they did, but you did early. I mean, if we can pull up the chart of Palantir, that had massive drawdowns as well before ripping onto new highs. I mean, do you see this as an analogous situation where people are slowly going to figure out how important and critical Oracle is going to be, and the stock gets back to where it was and goes from higher from there?
Yeah, look, I think the stock goes to $400 or $500 in a couple of years.
Yeah.
Right. And so an important thing is Amazon was never rewarded for their, while they were going through their infrastructure build out. And so how the Amazon cloud was born was that they needed enough cloud and computing infrastructure for Black Friday and for Cyber Monday.
Yep.
Right. And so they rented out their excess capacity, but they, that's the growth engine of their company, and it has been for some time. But while they were building that out, the stock was punished. Okay. The same thing is happening to Oracle. Hopefully that'll get it built out. Is soon, the stock will reflect this upside sooner rather than later, as it was in the beginning of June. But Brad Gerstner has coined the term the token flow. If you were in the token flow, you're going to be making money. Yeah. So, you're either selling. So Alex Karp said it 2 weeks ago to the day on Squawkbox, you're either selling compute or you're selling applications and software.
Yeah. No, look, I mean, we got the chart up from Palantir. Alex Karp, the head of that, he is an unabashed bull on AI, and he's been just absolutely right. But as I was pointing out, there's been tremendous pullbacks in Palantir along the way up. So I think Oracle is, even though there's so many people negative on it, I think you're going to be vindicated. You think it happens in the next 6 months?
Yeah, look, I think this is an unbelievable entry point for Oracle. Right here, you can bet the farm on it, and you're going to make multiples of your money between now and 2030.
I love
between now and 2030. And then so Broadcom, another one where the stock was just absolutely ripping, and is giving you an attractive entry point. And so a lot of these stocks have sold off on a few different news, right? And part of the problem with Oracle is Meta saying that, hey, we're going to rent out our excess compute capacity. Meta has no excess compute capacity. It's equivalent of the head of a trucking fleet saying hey, they need 1 million gallons a week of diesel to fuel their fleet, and they can only get their hands on 500,000 gallons, saying oh yeah, once we have extra, we're going to sell it to everybody. You're never going to have extra.
Is Mark Zuckerberg just the dumbest of the, I mean, he's obviously a brilliant guy, but is he the most just uninformed of the tech CEOs? He always seems to just put his foot in his mouth about things that everyone can see right through. There is no excess compute. And not even a week after that, they just start building another data center, right, in Canada, showing that they don't have enough compute. Yet he's talking about reselling.
It's not Mark who's stupid. It's the market. And look, man, I read the sales notes from Goldman, from JP Morgan, and from UBS on almost a daily basis. And those sales notes are a feedback loop of what the largest clients, the mutual funds and the hedge funds, are saying. These guys have no idea. The reason why these stocks are so volatile is because your average smart guy, Wall Street guy, has no idea how AI works, where it's going, or what the token flow is, right? So as an individual investor, if you can get your arms around the volatility, right?
Yeah.
And you can stomach that, and you can dollar cost average in. Like there's never been a time like this where if you had $1 million in these stocks today, in 2030 it could be 5 or 6.
Yeah.
There's never been a time like that.
I think it's a great point because, you know, it's the famous Warren Buffett quote, you pick your one, you know, buy when everyone's, you know, when there's fear, not when everyone's greedy, paraphrasing here, or, you know, when Wall Street's the only place where your favorite product goes on sale and everyone runs out of the store instead of running in to buy more of it. So I think to your point, how do you handhold or affirm your clients to use these volatility dips to add to their positions? I mean, what's been the most effective way to communicate the reason to buy on these dips?
Well, so Marvell is a stock that I've owned for clients for a long time, between 50 and 70, right? And so when it goes from $50 to 320 and it dips back down to 200, like it's all paper game. Like it's an easy process. And like when your average cost basis in Palantir is like $18 or $19, you know, it's not good to watch it go from 210 to 106 where it was a couple of weeks ago. But like you're playing with money.
Yeah.
It's like these are stocks, and like AMD, like I own a ton of that, and like $100. The stocks are like 500. You know, I have clients that are up 100% this year, right? Like those
That's amazing.
There are wild swings in those accounts.
Yeah.
But it's like, look, this is happening, right?
Yeah.
It's not stopping. We have years to go. We are nowhere near. So like stocks will peak, like, I don't know, 12 to 18 months ahead of peak fundamentals. Peak fundamentals could be 2033.
No, look, I agree for the AI side. And even if we just look, we talked about at the top of the show, the beginning of the earnings acceleration trend that's happening right now. We're going to have our second quarter in a row. S&P 500 earnings are going to be up over 20%. I mean, this acceleration is happening. It's getting faster, not slower. Got to ask you, though, what came to market? SpaceX. We're asking everyone today, is it a buy yet? What's your buy price on SpaceX? Do you have one?
Yes. So like I want to start dollar cost averaging in at $100, you know, and like if you had a Schwab or Fidelity account and you put in for it, and like I don't know what their cutoffs were. I have one client that didn't get any, but like, you know, he had taken some money out of his account and maybe that affected him. And then when the other people, clients, tens of millions of dollars, got like 50 shares or something like that.
Yeah, nothing.
But it's like, hey, you know, you play along with the novelty, and we're just going to build a position over time and hold it, because like anybody who's bet against Elon in the long run has been wrong. And like, obviously you buy his companies on the dips.
Yeah.
So I think this stock gets closer to $100, maybe 110. And then I'm just I'll buy some for myself. I'll buy some for my clients, buy some of my kids' accounts. And then like, look, you know, it's the space is not the next thing. It's the final frontier.
No, listen, I agree. We actually are going to be releasing a podcast episode next week with Dr. Rainer Zittelman, who just wrote a book called New Space Capitalism, The Entrepreneurial Path to the Stars. This is the guy that wrote the book, The Case for Capitalism. He's a historian and a sociologist, not an investor. And I mean, he lays it out. I mean, this is, forget it. AI, quantum, doesn't matter. Space and the space economy is going to dwarf all of that. It's the future for humanity. So I'm all with you. I'm with you too on the buy price, $100. Here's my question. Based on history, this stock could go, you know, based on the performance of other big IPOs trading at, you know, rich valuations on price to sales, this could go all the way down to $88 a share. Are you just backing up the truck at that point? Do you think there's a valuation level where it just becomes a screaming buy like Palantir was in the single digits?
No, like, I don't know, because like all his companies like are trading on 2 and 3 years in the future.
Yeah.
And like, there's just so many unknowns. So there could be wild expectations, and kind of like the history of Elon is that he overpromises, underdelivers in the short term, and he dramatically outperforms in the long term. Like you look at the sales for like the Model Y, and never in a million years did he think he would sell 1 million units in a year, right? Yeah. He did. So like Will
he sell his 10,000 humanoid robots this year though? Or is he going to be late yet again to one of his big sales predictions?
So if history is our guide, I would guess that he misses that badly this year, and then 3 years from now he blows away the initial estimates. Right? Yeah. That's kind of Elon's thing. And then I'll just leave you with this. Anybody knows that's watched me on Fox is a huge Trump supporter. But when he came out in 2017, do you have
a Trump tattoo yet?
Not yet. But he said when he came out with this thing called Space Force, I was like, okay, buddy. I'm like, I've been on board with most of what he said, but that seems like a little bit crazy. And then look, here we are. The world is dominated by satellites. So yeah, doubter Mike Lee proved wrong.
Listen, I'm coming around. No, man, I'm coming around to it as well. Some of the data is crazy. Like if SpaceX was a country, it would be the #1 country, like space program in the world by a factor of like 2 or 3x, based on the number of satellites, based upon the price per payload, the pound per, cost per payload. I mean, every reasonable metric, SpaceX is dwarfing the likes of China and the United States. So it's the best way to own space. It's just at what price is it the best time to do it?
So Lou, I'll leave you with this because I can see the beautiful Tom Hayes in the waiting room here. SpaceX has a video on their website, and you can see kind of like double time of their first few launches, and then it increases to like 100x, and it goes through all so there's like the first 15 fails, and then it speeds up as the video goes on, and now they're like close to 700, and the only failed missions are like the first 10 or 15, and not only is that unbelievable, it just makes you proud to be an American. Like it is unreal what this company has done. So I guess if you want to bet against Elon, you can ask Jim Chanos how that works out.
Or Michael Burry betting against everything in AI. And Palantir.
Let's go along some Lulu. Well, Michael Burry again follows Tom Hayes, and he's right there on PayPal. So
hey, we're gonna bring that up with Tom because I'll bet it with Tom all day long. I'm not betting alongside Michael Burry consistently, but appreciate you, Mike Lee. Tune in to catch him on Mornings with Maria at least once a week on Fox Business. I'm like you. It's not how we start this contest, it's how we finish. Oracle could be up and be one of the biggest winners. So we'll have you back for when the final results are in, my friend.
If not, I'll be hiding under my desk. I'll see you later.
See you, buddy. Listen, that's the beauty of this. We all whip around. We know each other. We know each other's stock picks. We know each other's areas of focus and expertise. It's a true camaraderie among these guys, which is what I appreciate, because here at the Big Skinny, we're about being humble or being humbled by the markets. And the best way to stay humble is just surround yourself with smarter people that enrich not just your life, but enrich your portfolio because they share their ideas and their knowledge. And with that being said, I don't think there's a hedge fund manager with a better track record on Wall Street over the last 3 years than the one that is about to join us now, Thomas Hayes. I would say the only thing you're not winning at yet, maybe before I hear the update, is your golf handicap versus Kevin's golf handicap. He's down to a 6. Have you broken down below 6 yet?
I have not. No, actually, I took a painful detour from 9.2 up to 12 after getting a lot of lessons. And then I just went back to what works. I'm back down to a 9.4 and probably headed to a 7. Playing really, really well lately, but I don't know if I'm ever going to be able to match Kevin with his 6. He just gets out there and whips it around with like it's nothing going on.
I know, without a driver, but it's amazing. His driver stays in his garage for a decade plus. But let's talk about, we're talking about performance. You are turned around, Tom, for a reason. I mean, going into this week, PayPal was down, nice double digits, and now it's flat from where you recommended it because there's a takeover offer. What do you think about the valuation offered in this buyout? I think it's $60.50 a share was the price that was offered. Way too low. Where do you see this playing out from here?
Absolutely insulting, despicable offer. It's got to come higher. Look, we after we were on your show, they had a surprise change of CEOs. It sent the stock down to $39, and we bought hand over fist. We brought our basis down across all accounts to the low 49s. So look, we didn't get into this thing for 20%. We got into this thing for a 3-bagger, 200%. And they come in at $60, which is like a 12% free cash flow yield. We bought it with a 17% free cash flow yield, and that old dog don't hunt. So they're going to either have to sharpen their pencils or go away, because the company's hitting on all cylinders. I mean, record revenue per share, free cash flow per share, earnings per share, record low multiple. So historic multiple 18 times, current multiple 9 times. And the reason was because the lower margin business, which is the Braintree, when you get it in an Uber, you're paying PayPal through Braintree. When you buy tickets, you're buying through Ticketmaster, you're paying PayPal through Braintree. You just don't know it. And that business grew exceptionally fast, $1.7 trillion of transactions, 90% of the Fortune 500, and branded grew more slowly. So that brought margins down. That was the bear case, but now margins are inflecting back upward. The turnaround is just getting started. And if they don't do this deal,
fundamentally, they're in a much stronger position to just reject this takeover offer. It's not like
100%. Anything below an 8 handle is insulting, and and must be rejected by the board. And anything between $80 and $100, like, you know, you could take it, but you're still stealing, you know, $50 to $70 of upside from the current owners at that level. If we're just to, you know, keep executing the turnaround plan as they are, Venmo growing 20%, buy now, pay later growing 20%. The ad business just coming off its nascent stages. Mark Grether, who built the ad business for Amazon, 50% of operating income. Most people don't know that. He's building the same thing for PayPal, which has tremendous amounts of data over the last 3 decades. So a lot of outs. I think the net effect is either Stripe will come up, maybe not enough, but I think it's going to invite other bidders to the table and
run a full process and get it up higher to a valuation that might be a little bit more palatable.
Yeah, but I think the best case scenario is they just keep executing and doing what they're doing. But you know, if someone's going to take them out, it better be a high number, 80 to 100 plus. And the obvious buyer would be Elon Musk.
Yeah, no, agreed. Going back, you know, right? Was he one of the original PayPal mafia? So getting it back in his portfolio there. Quick question for you before we move on to Dentsply, XRAY. I'm noticing a theme with you. You like stocks where the fundamentals are undeniably undervalued, right? Fundamentals are near an inflection point, turning point. But I'm also sensing you find management executives that have had success at another company that have now ended up, you talked with here at PayPal, a guy that came from Amazon. We talked about your favorite pizza stock and the digital guy that turned around Domino's is now over there. Is that part of your investment discipline to find proven executors that move to new opportunities to extract value?
I mean, generally, you don't want to hire the arsonist to put out the fire he started, right? So, there are a few exceptions. We had Jeff Edwards at Cooper Standard when, you know, we bought, I think it was around 4% of the company at $5 a share, and he oversaw the company share price drop from 146 down to 5. But he was the right guy. He was the right operator. These were exogenous events with COVID and other factors, and he's done a great job turning it around. It's a $30 stock now, probably going to 100 over time. Once we get to peak cycle autos, average car on the road, 14.5 years, more licensees than ever, more road miles than ever. So that replacement cycle, they've got a massive amount of operating leverage. We think they can earn $10 a share at the top of this cycle. They earned $7 a share when it was trading at 146. So that was the exception. But usually with turnarounds, we want someone who has a proven track record. With VF Corp, we've got Bracken Darrell, who did a 26 bagger at Logitech, and now at Dentsply, we've got Dan Scavia, who came from Globus Medical. He had a 4-bagger there as chief commercial officer, and then finally CEO. So
where do you see the upside for Dentsply here as this turnaround gets some traction? What's the latest developments, and then kind of what's your latest estimates of where we get to?
Yeah, it obviously all opinion, not advice, but we don't get into these things unless we see at least a 2 or 3 bagger over 3 to 5 years. In the case of Dentsply, I think it's going to be more. They've been around, both Dentsply and Sirona. They've merged in 2016, which they didn't do it right, but blah, blah, blah. They've worked through that. These are, you know, century-old businesses, and the issue you have with the dental industry, it's usually a GDP grower. very stable, mature business. Dental visits are still below pre-COVID levels. So like autos having the average age of a car 14.5 years on the road, it's deferred pent up demand that eventually will get resolved. Because you have a 14-15-year-old car, sooner or later you're driving down the highway and the axle falls
busted
off or the
autos and
transmission
busted
breaks.
teeth need fixing eventually.
Yeah, and so that's going to happen. Aging population, more people into vanity dental, and they're the leader in chairside milling. So in the old days, you go to the dentist, they take a molding of your tooth, and then you come back in 2 weeks, and come back in another 2 weeks, and come back in another 2 weeks, and 80,000 appointments to get one tooth fixed. And now you get there, they take a laser of your mouth, they put it in the machine, it prints out a tooth, they stick it in your mouth, and you go home, and it's done. And so they're a leader. And Dan Scavia, the previous management just were completely brain dead. They did a Nike play. Nike said, "Oh, we're going to be all DTC. We're going to screw our wholesalers," and that worked out really well. The stock's down 80%. With Dentsply, they did the same thing. Scavia comes in, and he immediately reestablishes the relationships with Shine, with Patterson, with Atlanta Dental, restores that, gets distribution going. All the fat is cut out of the business. Everything's hitting on all cylinders. And he's even talking about buying back stock towards the end of the year, return to growth. He's got it firing on all cylinders. So we love this story. What do we think? We think this could be $50, $60 stock again. It'll take a few years, but there's huge operating leverage, huge pent-up demand, and it's got a huge moat. Ask any dentist if they've ever heard of Dentsply Sirona. They'll be like, yeah, it's the best in the business. What else do you want to talk about?
Yeah, exactly. It's the most well-known. I'm not even going to ask you about SpaceX because you're the deep value guy, and there's no way, no metric, no model you can put on it that even says it's remotely undervalued. Am I wrong?
You're right. I mean, look, you never bet against Elon Musk, but there are some things you got to know. Thoreau said, "Know thyself." I operate in an area that I have an edge. I buy good businesses at great prices and get doubles and triples. People want to bet on the future and guess the future. I'll leave that to them. Objectively, it's a company doing $18 billion of revenue, losing $5 billion of cash, trading at 100 times sales. So was when everyone wanted it at 220, now at 133. No one's talking about it again. All the people that were pushing it at 220 have disappeared off their Twitter accounts. And, so at some point it makes sense. I think that, it's well below 100. You really have to believe Starlink is awesome. It's for rural, it's for areas that, but you're never going to beat fiber in terms of delivering, but it's an enhancement. It will have some impact on the mobile business, certainly in dead spots where there aren't towers, et cetera. As far as setting up data centers on Mars, I mean,
there's some physical challenges there that I think everyone's just being Pollyanna about, like, oh, it's no big deal. We got, you don't have to worry about cooling in space. Yeah, actually you do. The physics require, you can only dissipate heat in 3 ways: convection, conduction, or radiation. And radiation is the only available way to do it in space. So you have to have huge surface areas. So I just love the fact that even a stock that you would never go near, all the fundamentals on it and why you wouldn't go near it. So appreciate.
Yeah, I mean, look, there's always a price for something. You'd like to buy a little bit of Elon Musk, but there have rarely been instances where there was an opportunity to buy it at a price that makes sense. But I would just say it's a lot lower than here. So I never rule anything out, but it just won't probably ever fit in our framework, and we're okay with that. And we hope a lot of people make a lot of money on it, but we won't be one of them.
Understood. And you're doing just fine without it in your portfolio with your framework, man. So kudos to you always. I told people in this contest, until this thing is done, until we turn the clock at the end of New Year's Eve to 2027, don't count and don't bet against you, because your stocks, when they turn around fast and they get moving. So appreciate you sharing your insights. You can find more if you're listening, hedgefundtips.com. Tom Hayes, always a consummate professional and the best golfer that I know.
Thanks. Appreciate that. Thanks, Lou.
All right, brother. Talk to you soon. Listen, we're going to take a quick break before we come back to the before you run chart, the one thing you should keep in mind. But don't forget to join the conversation. Great insights from great minds. But where's Dodd? He's coming up right after this break with a question of his own. Don't forget to subscribe to our YouTube channel. We'd like to be a little bit like Mr. Beast, just like less than 1% of 1% of his followers would just make us really happy. Don't forget to follow us on X as well. You'll see us posting insights throughout the trading day about multiple stocks. Today alone, I was talking about Eli Lilly, SpaceX, Gain Therapeutics, where we just launched a podcast episode with the CEO there, developing a drug that they've now named for the treatment of Parkinson's disease that's going into phase 2. It's the only drug on the market that's actually shown to arrest progression in the 16 patients that are in that initial trial. So very promising stuff. We post updates on those things and more on X all throughout the trading week, even on the weekends at some time. So we're coming right back with the Dodd man. One question before we run, one more chart before we go, and then we'll talk about when you're going to get the rest of the 12 picks we promised from the beginning of this episode, right after this short break.
Now, oil shipping and the global economy all hanging in the balance. Fox Business contributor Lou Basenese joins us now. Lou, do you see this happening when it comes to the tolls? Americans are concerned that this may affect them at the pump as a result
absolutely.
of this.
Look, I think this is the tariff logic applied to Iran, so it's escalate to negotiate. I don't think we'll ever see this 20% cargo fee go into effect because it's really big. I mean, if you, just for comparison, at $80 a barrel oil, the average large vessel carries 2 million barrels, so that's about 160 million. That's $32 million fee for that. And the Iranians were talking about maybe a $2 million fee per ship. So the president knows what he's doing. We saw this with China and the tariff war. Right? Let's raise it to 100%. No, let's make it 200%. And then it brings everyone to the table. So it's a negotiating sledgehammer. And for the everyday Americans, I think the important thing is we haven't seen oil spike back to over $100 a barrel. So
why is that?
Just because I think everyone knows this is the tactic is to escalate to get them to the table. Longer term, this trend, we're seeing that we've restored shipping through the Strait of Hormuz. And I don't think it's the president's plan to turn the Strait into the New Jersey Turnpike and charge a permanent toll. It's to restore order there and keep it from being a forever hostage lane like it has been for the last 40 plus years.
So here's the...
All right. Welcome back to the Big Skinny with me, Lou Basenese and Dodd, man. He's finally here. We're not going to say anything about football teams. We're going to one question, one chart, and we're getting the hell out of town.
I've got two questions. Actually, a question and a statement, and I'll make it quick because I know we're running short. But, listen to all the guys. It's great that you guys are peers, but it's even better that it sounds like you guys are really like buds, and that's really cool to see. Just wanted to say that. But Mike was talking about Oracle specifically, and he's very bullish on Oracle, and it's pretty low right now. So I wanted to know, is this like one of those buy the dip type situations? What do you think on Oracle? Do you have a specific opinion on that?
Yeah, I mean, I haven't dug into the fundamentals as much as Mike has on Oracle to have the same level of conviction he has. I agree with his just business case that he makes, that they're going to be a big player. My objection, and if you remember, we did the podcast episode with my other buddy, Mark Lichtenfeld, who's a notorious contrarian. He thinks it is a massive short, which he's doing well being short Oracle here. His thing was basically how Oracle is funding its growth. And that was what the concern is. And that's what the market concern is, that these big tech companies, these big hyperscalers are using all their available cash flow and now issuing debt to generate more cash to keep investing. So it's like, think about you taking a second or third mortgage on your home. That's not really smart financial behavior. And that's what people are trying to say that Oracle is doing. They're basically over leveraging their home to build an expansion on it in hopes that they can put more people in it, right? So like, say you want to turn your home into an Airbnb, put a addition over your garage, and you took out a ton of debt to do it. So that's the big concern at Oracle. They're making the bet that the growth will justify it. They'll grow out of that debt and be able to service it. I don't have a horse in this race. Candidly, I own the semiconductor ETFs, some other names around that. I haven't gotten into this middle layer cloud providers in terms of stocks. We've been doing it with companies that are the data center builders, right? Like TeraWulf, Core Scientific, Iren, Cypher, CleanSpark, which Adam Johnson will come on and talk about next week as we close out this update on the top 12 picks. But no, so I'm not buying Oracle. I don't understand it well enough. I have been buying on Mike's.
But you didn't buy Palantir too, you said.
I did. I started buying it recently, a couple weeks ago, maybe about a month ago. Mike was early to that and a huge winner for him, but I think it finally makes sense to me, and the fundamentals are justifying how big that's going to get. You essentially need an operating system like Microsoft is an operating system for the one type of computers. Apple's got its one. It's an operating system for companies to use AI, and they're just embedded. Like, you're not going to extract Palantir out of the companies that are using it. So the more we use AI, the more the customers are paying them more money over time. So I'm a Palantir over an Oracle guy. Long story longer.
All right, and then quick statement, Tom. Cool. I want to rename him Cool Hand Tom. That guy is smooth as silk. But I really liked what he said about, just hitting doubles and triples. I think something in my head that's always in the newer investor problem is I'm thinking like, well, okay, what's going to be a grand slam? What's the next grand slam? Or, what's going to be a low cost of entry to a, high reward, which always equals more risk and a lot of volatility. So I need to start thinking a little bit more like, what I perceive Tom to be,
look, it's a great reminder. We all want to get rich quick. And the problem is you can't, or get richer quicker. And that's just it's not the way the markets work. I think Tom's more about, hey, can I get runs across home plate? And that's going to take singles, doubles, a triple, and occasionally you get a home run or a grand slam, but you don't go swinging for the fences every time, because you see the greatest sluggers. I love it. Greatest sluggers in baseball history, for the most part, that just swung at pitches, ended up having crappy batting averages. If you look at Ted Williams, the greatest hitter of all time, and you look at the breakdown of the strike zone, he was very particular about the pitches that he would swing at. He knew where he could hit it well. That's what Tom does. Tom has a very narrow filter, deep value, undervalued names. He maybe has 8 to 10 positions at any given time. And I'm just telling you, I've watched it. Disney, Intel, PayPal now. He is just very consistent. And you heard him say it, which I love him. He knows who he is, and he knows what pitches he's going to swing at. And he just waits for those pitches to come. And he does really well. I won't brag.
That's what I'm saying. It seems very calm and just, hey, I'm not going to get distracted by the noise. I know who I am. I do what I do. And, he's just, slow and steady wins the race or whatnot. And, it's kind of funny, you talked about Ted Williams, like, as a Yankees fan, are you allowed to do that?
I can.
Talk about
it's
Boston
okay.
Red Sox?
It's all right. That was before my time. It's not like I'm talking about Pedro Martinez, who was a arch nemesis for the Yankees during my youth growing up. So before we run, we do have one chart that's a reminder, just as much as Dodd's point about, hey, don't swing for the fences, hit singles and doubles. That resonates. Here's a reminder that all that ever frickin' matters is earnings. It's the connect the dots for dummies, dude. I know everyone gets tired of saying this, but with everything going on in the world at any given time, there's so many reasons why people can get bearish and pessimistic. The only time I ever get really worried in the market, and Mike alluded to it, is when you see that we get to peak earnings, peak growth, because we know you're coming over the other side of the mountain at that point. And we're not there yet. We showed it in the first part, but this is another chart that shows it. Connecting the dot for dummies. What's the price of the S&P 500 versus the earnings per share for the S&P 500? You see these earnings estimates going up and to the right and higher over time. The S&P 500 is going to do the same thing. The price of it, the stock market, is going to keep hitting new all-time highs as long as those earnings go where they think they're going.
Price ultimately follows earnings, right? I need a t-shirt or something there. Maybe a big tattoo.
Maybe a big tattoo. Maybe you can get a t-shirt like Kenny's Kale, right? Except I don't know that price ultimately follows earnings fits nice and conveniently on the chest of a t-shirt. So,
dude, when he jumped on early before he got on, he did have his shirt off, and I was like, no way he's coming on without his shirt. I swear I thought he was. He with his shirt.
He would have, but he's tanner than a leather bag, so he would have looked fine. I would have disappeared in the background because I'm transparent. I'm so pale. But
I figured if he jumped on without a shirt, you were just going to rip yours off and just go, we got to go shirtless here.
I want to keep my marriage. My wife would kill me if I did that. So anyway, I'm not the big skinny yet. We're not skinny enough to be pulling that stuff off. And I don't want to lean into any stereotypes of me being a guy from New Jersey too much. So, but that's all we got for this week. The Big Skinny with Lou and Dodd. We'll be back covering the last of the stocks that we haven't covered yet from our January episode, that being my picks, as well as Adam Johnson's next week. Dodd crying in the corner.
Nobody puts baby in the corner.
This was me at the end of the show, I knew I was going to have very little time.
You did well with the time you were given, my friend. Yeah, appreciate you. Appreciate you all tuning in for this episode. We'll see you next Thursday again on The Big Skinny.
Reunites.